Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, here's a couple of questions that here's a question that you need to ask yourself if you're looking to trade on the stock side of it. Since the Great Depression, stocks have performed well. Are you bullish, bearish, or neutral? Me personally, over the long term, I am still a bull. And when I say long term, I'm talking between the next 15 to 30 years. Now, I know for some of you, you might not have that much time to be bullish. With that, bears can definitely make big money some of the time. There's a saying in the marketplace that the market takes the escalator up, but the elevator down. Last fall, the market took the elevator down. And I think a lot of people would say they didn't take the elevator down, they just moved the elevator and just jumped down the shaft. A lot of people might view it that way. So the bears last fall, they definitely made a lot of money. Do you think you can be that bear? Do you think that you can be the smart bear in the stock market? At times, the bears can definitely make more money than the bulls. It's just that little thing about being right. How's your stomach? Will the bulls ever come back in this latest world-ending tragedy that we have had? Well, this is what keeps me going. I'm a very proud American, and the market did come back after the tech bubble. Back when the NASDAQ was above 5,000 and the bottom fell out and everybody had these tech stocks that they hated that they loved, but then they quickly learned to hate because the bubble popped. The market did come back then. Now, right now, we're right back to where we started. But, nonetheless, we did enjoy a nice little bull run for the time being. The market came back after the S&L crisis. When all the corruption was going on back in the late 80s, early 90s, the market came back. The market came back after Black Monday, back when the Dow lost 22% in one day. Now, to give you, it was a 500-point drop approximately in the Dow in one day in Black Monday back in 1987. That was the biggest percentage drop in market history. But to give you an idea of it, that would be like the Dow dropping 1,800 points in one day today. So we had a big drop in the marketplace, but we came back from it. We came back from the high interest rates of the early 80s. We came back from the flat marketplace of 1966 to 1982. Make a mental note of the flat marketplace. I want to come back to that in a moment. We came back from the bear market of 74. We've been through Vietnam, we've been through Korea, we've been through World War II, and we've been through a Great Depression. The market has persisted throughout time. I want to make note of the flat market from 1966 to 1982. You might say right now that you might be bullish over the course of the next 15 to 20 years. Does that mean that the stock market has always come up over that time frame? Look at a chart from 66 to 82, and you'll see a pretty flat market. With that being said, if your retirement time frame is 15 years away, this is an area to where we have history showing that that is a time frame to where the market was flat. Now, why it was flat, that's beyond the scope of today's presentation, but the point is, the only people that were making money between 1966 and 1982 were the premium sellers. Now keep in mind, options weren't listed until 1973, but the point is that premium selling can definitely have a place. Does that mean that the market goes up constantly? No, it does not. In the short-term world, it's totally different. So what's a way with which we can kind of separate things as we do this? Well, first off, let me tell you about the arrogant Condor trader. The arrogant Condor trader is someone who I met very frequently between 2005 and 2008. A little bit about myself. I worked for Options Express the last 4.5 years. I was the director of education there. And recently with what I have going on in my life in terms of some opportunities that came about, I decided to become an independent registered rep. I love Options Express to death. I still use them to broker all of our trades through for our clients right now, so I have no bad blood with them or anything like that. For self-directed trading, all of our self-directed clients, we use the Options Express platform. We're very excited about Options Express. But with that, through my years at Options Express, I got to meet a lot of people. And between 05 and 08, a lot of people would say, Mike, I don't understand why the whole world doesn't just do the Condor. I've made money 13 months in a row. I've made money 22 months in a row. I've made money 18 months in a row. And it seemed that every time I would go to a city, and I would typically go to about three cities a month, I would say. We'd do live in-person events typically. I'd always meet an arrogant Condor trader. And every time they would always say, well, so long as the S&P doesn't move 8% in 1 month, I'm okay. I'm going to make 4% this month, or whatever the case may be. Now, after the fall of 2008, I have yet to meet a single arrogant Condor trader. Does that mean that the Condor is dead? We don't think so at Know Your Options. Money management is what keeps you alive in all of trading. I don't care if you're a buy and hold mutual fund trader. I don't care if you're an S&P futures day trader. Whatever you trade, money management is the bottom line. This is something that I've always told people about when you're trying to learn to trade, or when you're looking to just figure out what you're trying to do with your mentality as trading. This is what we tell clients I've told clients for years. You can be right 9 times out of 10 and still lose money. That's the life of a Condor trader. You can be wrong 9 times out of 10 and still make money. That's the life of a futures day trader. I want to tell 2 stories with each of these, one story for each of these bullet points. First off, someone might say, how can you be wrong 9 times out of 10 but still make money? I have a friend, Randy. And my friend Randy's actually a great success story to me. He inspires me personally. And he's an S&P day trader, and he stares at the screen all day. I believe he has 24 monitors. He has all his specific indicators that he uses. And he's wrong a majority of times when he trades. However, Randy's making it. Randy's making money, or at least from what I gather, he's making money. Maybe he didn't make money today. After all, the guy's wrong 9 times out of 10. But his stop loss is 1 point on the S&P E-mini contract. So the point is that he's looking at this all day, and if the trend doesn't go his way, or if the trend doesn't reverse, or whatever his methodology is, he is out right away. And he's fine with the fact that he's going to be wrong all the time. But that one time that he's right and it goes all the way, he's not going to lose just 1 point, or he's going to lose 1 point every time he's wrong. But he's looking to make 10 to 20 points when he's right. So with that, he not only gives up what he is wrong on, let me rephrase that. He not only gets back what he was wrong on, but he'll get back his profit that way. He understands that over the long haul, he's going to be wrong a majority of the time, but the times that he's right, he has the ability to stomach being wrong all those times because he believes with his trading system that it's going to be right for him and that it's going to work throughout the life of his trading career.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.